Hello everybody. Let's get some of this going here. All right, market is up at a precipice point. Okay, this is what I call shelf. So that's like right here. You can see that sometimes it's just one day, but that these shelves are interesting entry points, create interesting entry points in the market, in stocks and trading and charts and charting. And so just got a notification to your channel. That's good. Good morning, Mom. All right, you were working hard yesterday. I came up with a couple of stocks that I got in yesterday. That was Alaska Airlines, looked good. I've been in Coors, so TAP, T-A-P, Coors, the beer company, for a couple of days because a lot of consumer staples are lighting up right now. A lot of money flowing into consumer staples. And like I said, there's no reason to be going into them thinking that they're going to go up in value because they're going to go up in value. The only reason they're going up is because money's pouring into them as a safety net. And so that demand over the supply is pushing the prices up. They're not anymore. Campbell's Soup is not projected to grow. There's no Colgate is, Procter & Gamble. None of these are projected to grow or have any increased value. But the nice thing you get in return for parking money there, which is what money managers seem to be doing right now, is you get a dividend. And make sure if you do park money there for a little while, maybe a year or however long that's going to be, that you're getting at least a 4% dividend. And usually with straight flat across value, you need 7%. You need at least 7% dividend from something like Verizon or any of these utilities or healthcare companies that are nice and flat and even. They're not going anywhere. They're not doing experimental this or that and that up and down all over the map, trying for growth and everything. Just like, they provide a service for the last 50, 100 years, AT&T, whatever you name it, Campbell's Soup. Park your money there. Make sure you're getting at least 4%, ideally 7% while you're sitting there. Now, if you don't even want to do that, you could always put your money into treasury bonds. You can go in and out of treasury bonds as much as you wish, but if you park your money in treasury bonds right now, you're getting 4.5%. And as rates come down and there's deflation, that increases the face value of the treasury bond because you got it at 4.5%, and now other people can only get it for 2%, let's say, in a year from now. So your money doubles. So you're getting 4.5%, yes, as a dividend, but also the value of your money goes way, way, way up as rates come down. You can go in and out of bonds as, they're fully liquid, just like stocks. But obviously, if you hold them, then you get your payments, your coupon payments. And 30-year bonds are the ones that will have the most variance between when you get them and when the rates come down and them doubling in price right now. If you get short-term bonds, that won't happen, but you will get your 4.5%. But then you might as well go with a dividend-paying stock, and always diversify all ideas, other than treasury bonds, but, always diversify, getting into Colgate and Campbell's Soup and all that kind of stuff. So anyway, but those are going up, right? And it's actually stark. It's not even a minor effect. I mean, look at Campbell's Soup. Let's see, CPB, I think it is. Yeah, huge push yesterday. I mean, for the last few weeks, but actually yesterday it dropped a little bit more. But TAP has been more resilient. Beer has been more resilient. Bud didn't look quite as good. But you can see all of these. Colgate. Let's see, Colgate, Palmolive. Oops, I did oil. Colgate. Yeah, they're all coming up the bottom, and money managers are flowing money over there. So anyway, a little bit of your money should be in consumer staples right now, just to protect it. Probably 10%, or basically maybe a quarter of your equity exposure. So if you have a 60-40, 60% bonds and 40% equity type of portfolio, a quarter of that 40% in equities right now should be money managed, should be moved into probably consumer staples, pharmaceuticals, that are protective, like healthcare, services that are nice and flat, and utilities, all the defensives, Philip Morris and, Smith and Wesson and all that shit, alcohol, it's all, the basics for life. And especially, but it's not like, we're expecting any kind of apocalypse. It's just that, I don't know, there's some rough economic turbulence right now while we're flat, which is pretty typical. You get up to the stratosphere in an airplane, and sometimes, that's where you're going to get the bumps, because you've got the differences are more stark. Well, that's what's happened with rates. Rates reached a flat line. The economy has reached a bit of a flat top, and we're now recovering. But we're not really going to see that recovery for many quarters. It's because it's going to have to gestate and come out in the earnings releases and the advices. What do they say when they have the calls? The conference calls. Anyway, the advice, whatever they call that, advising. And anyway, NVIDIA had a really good day. After hours, had some good earnings, I suppose you could say. It was flat, and it added some support to the market. The market, of course, has been in shambles the last couple of days. The market is opening in 3 minutes, but as far as stocks to get in right now, yesterday I got into TAP, I got into Alaska Airlines, and this one called CVLT, Commvault Systems. I mean, I just love these charts. They're just looking fucking phenomenal. But probably Alaska Airlines was the most interesting, because I looked at also United Airlines, Royal Caribbean, NCLH, Delta Airlines, and nothing really looked quite as tastily set up and as consistent as Alaska Airlines. So I tried that, but who knows? There's a lot of money management rebalancing going on right now on a daily basis, left and right, and it's like, this is a round in the boxing fight where you just want to be defensive and you just want to get out there and keep, and watch out. Just no knockouts, but if you can find a shot, go for it. But otherwise, just survive the round. And I think that's going to be maybe for 1 to 5 months, depending. And I could be completely wrong about that. Everything could just recover swimmingly. Who knows? We could have a very fast right side reclaim going on. Economically, it just depends on the reports. I think we get today. I think maybe we get a GDP revision. Let me see. Actually, we had that. Let me double check. Thursday morning. Let's see how that came out. GDP revision was in line with expectations, which is great, because no bad news right now is pretty much good news. So I think, that's a relief for it to be unchanged and at expectation. I mean, you can't, ask for a miracle and be expecting for something good, a surprise on the good side of things. But things not being bad is good enough right now. It's sort of like, if you can break even on your trades, I'm proud of you. That's good. So anyway, that's where that is. And the market opens in 1 minute. I'm live on Twitter. You're welcome. I'm live on Twitter. I'm doing okay. Just got notification. I like Alaska Air. Yeah, ALK. I'm live on Twitter. I'm live on YouTube. I'm live on Twitch. Anybody out there is watching wants to go to a different platform. Hello, Randy. There you are. Okay, so I will have, in 30 seconds here, we'll have a list of what the breadth is like in growth, which is where we invest, or we trade rather. And I'll know whether or not we're going to have a mostly green day today or a mostly red day. We're going to find out in about 15 seconds. From the open, you can start to see some insight. If you don't know what breadth is, that's, what percentage of stocks in that basket are green and what percent are red off the open. From the open. Not a lot of people measure it that way. It's a much smarter way to measure it. That's how I measure it. Okay, here we go. We're going to get, within 10 seconds, I'm going to have my first refresh on that scan, and I'll know. Okay, it looks slightly weak. 45% green, 55% red, right off of the open. But hold on. Sometimes that can be, there's a battle at the open, so this can last sometimes 2 minutes, the opening battle. Sometimes it can last 5 minutes. And then sometimes it can last 30 minutes. It can be a really crazy morning. but usually you have your answer within 5 minutes. Okay, so if I'm trying to get some refreshes on the breadth information, let's see what we get. From what I can see, we're quite flat at the moment from my positions, the market, and the various market charts that I look at. But I can say this, the dollar is stronger this morning by a percentage point, which is huge. That's huge in 1 day change. So I believe we're going to have a strong day today. I believe. And that's based off just the dollar strength. But sometimes the market will front load. What is it called? God, I don't know. Sometimes I have all my coffee. I had 2 cups of coffee this morning. It's called front run. The market will front run sometimes what's going on. And so sometimes the market will go down even though the dollar's going up because the market feels it's front running an outlook. But the dollar is responsive. If you want to know exactly where we're at economically, you can look at the dollar. The dollar is related to total global economic balance. That means domestic strength would show up there, as well as external strengths or weaknesses would show up there as well, and they're instantaneous. You can't trade the dollar. You can't buy up the dollar. You can't move the dollar. The dollar is an index. It's an index of economies versus economies. You can't push it around like you can a ETF of the market with billions of dollars, like you can a stock or a GME. You can't what do they call it when the stock goes way up? Short squeeze. You can't squeeze the dollar. You could if you had, I don't know, $3 trillion or more for the morning to play around with. So you could, but you wouldn't be doing it with the dollar. You'd be going around, doing something with the economy of some other countries or our own, like in a massive way. Okay, we are actually now seeing 60% breadth in growth. Growth. I said growth. GROWDTH. We're seeing a lot of breadth in growth. Is that a frog? What the fuck is a growth? Is that some kind of toad? That's funny. We're seeing a lot of breath in growth. These are frogs doing mental breathing exercises. Okay. It's actually increasing to about 70% positive breadth now. Okay, and we have some interesting names that I like that I haven't seen much of before, but I do want to get into some things, but I might not even have any money left because because I am fully allocated into Alaska Airlines, TAP, and CVLT, whatever the fuck that is. So anyway, we have some nice names here showing up that I haven't seen for a while. Shift 4 payments. Okay, no, that's not a signal. And then, but what about Uber? It's come up. Okay, technically, yeah, that's an entry, but since it's flat at the top here, it's not an entry. We need trends. Duolingo. Okay, it must have reported, or it's reporting tonight. It's reporting tonight. Stay away from it. Don't get in front of a train before the train takes off. You don't know which way it's going. CFLT, also sideways. See, sideways in general, so we wouldn't even want it. We want trends. QFIN. I see Roku, CRS, Siri, DraftKings. There's a whole bunch of great names. Okay, we've pulled back to about 55% breadth now, but it feels like we're pumping from 45 to 70 as far as the breadth goes. And if we can get up above 75% breadth, that'd be 4 points to an uptrend in breadth. And that would give me the confidence for an hour or two that we're probably going to remain green. Okay, this QFIN looks very interesting. And why did I not get into that yesterday? It looks so good. Yesterday's signal was an entry. I think I was trying to get in, and I did not get a chance. You guys, hopefully you got in because that's a beautiful signal on a beautiful chart. And it is following through today. It's doing what's called backfilling, and it's about to break out to more highs. But the problem is now it's too late to get in. All right. So yesterday, hopefully you guys got into QFIN. The stop would have been at 40.75. Now it's at 42.40. The entry would have been 41. I mean, you could have got a 16 to 1 on QFIN. I probably was salivating at that yesterday. I'm not sure. I'd have to rewind the the program yesterday. Let me see what kind of alerts I gave yesterday. Let's see what we got here that I posted to the group. I was watching travel. QFIN, it was right there. Look. Boom. I actually told you guys that. Here we go. Yesterday I said this. I'm going to make it big. This was in our group. I guess I made it too big to even display here. Hold on. Yep, still too big. Okay. QFIN, CCL, and WRD were the ones I wanted to get in this morning, but I'm fully allocated, so I couldn't get them. But by God, that QFIN looks beautiful. CCL and WRD. Let's see what the follow through on those ideas are. How they happened. All right, not much follow through on the CCL. WRD, not too much follow through. But QFIN, working out. All right, good deal. And the other ones that I was looking at yesterday, was the travel, and then NNE, which today gapped open up, and yesterday was a signal at entry. Anybody get that NNE on my signal yesterday? I know I talked about it, definitely talked about it. And I know some of you are really horny about that one, nano-nuclear energy. I certainly was way back when, but I got all this gain out of it already. So I basically already invested and got like a 200% return. But I'm happy to take signals on this as they come. Lunar is another one. No, that's not working out. So NNE and QFIN definitely following through, but that was from yesterday. Now Palantir, I certainly would like to get an entry if it signals. Bam! That's an entry on Palantir. I'm getting in. Boy, I couldn't tell you enough how much I need Palantir. 91 stop, 93.30. It's $2.30 stop. So that's 152 shares for me. Okay, I'm in. All right, there she is. And now I've got to set. I have to figure out. Okay, the normal ATR in this is $7. So I'm actually getting. Let's just do the exact math here. 93. So I got 91 is the stop, guys. So 213 divided by $7.22 of typical ATR is 0.3. As we divide that. We divide 4 into that, and we get 4. Seriously? 13.5 to 1. That's fantastic. Now I multiply my risk unit by that, and that's my profitable target, $4,745. Okay, now I divide that by 10 to get all my profit targets, or 20. Let's see. Divided by 10. So every $475, I'm going to take out 15 shares. Every $475. So I have to mark that up now. So I just go in here, sell here at 96.10. 475 times 2 is 950. You can just rough math this shit, You can just call it 450 or 500, every $500 taken out, whatever worked for you. But I like to try and exercise my brain. So 475 plus 950 is going to be 1425. God, I hope I'm right. If anybody knows that I did a calculation wrong, please let me know right away. Oops, look at that. I did that without GTC EXTO. I got to do those orders again. I did them as day orders. They need to last overnight in extended hours and good till cancel. Okay, keep it going. I said 1425 plus 475 is 1900. All that carrying over of the digits is stressful on the mind. 1900 plus 475 would be 2375, I believe. Okay, 2375 plus 475. Time to bring out the fucking calculator. 2375 plus 475, 2850. Okay, and then 2850, plus 475. 3325. That's a little bit easier. I'm trying to use my brain, but whatever. It has its limitations. 3800. Another. That's my 8th target. My 9th target is 4275. It's going to be interesting to see where this ends up. It's 13.5 to 1. We can get on that. You can actually get better than that right now because it pulled back even more, you guys. You could probably get close to a 15 or a 16 to 1. Plus 475, 4750. Target. 4750. Did I miss one? Or is that all 10? That's all 10. Okay. All right, now all we can hope for is the market wins. Some follow through. That would be nice. Otherwise, I'm going to get stopped out here. It looks like I might even get stopped out. $1 of risk right now on Palantir, if you were to get in now, allows for 28 to 1. I mean, that's a bet worthwhile, but it's also looking like we're going to get stopped out. So you got to balance the 28 to 1 against whether or not you're ready to get in that knife fight. Yeah, it looks like I'm about to get stopped out. But that's fine with me because I'm getting a 13.5 to 1 in my projection there, which would have taken me to 93. Let's see, I'm going to tell you. And there's probably other opportunities we can look at, but we'll look at those in a minute. 13.5. Yeah, that's totally feasible. Right up to the top of this whole range. Boy, that's actually a gorgeous looking situation. Probably later in the day, I'll try to get back in if it does fail out on me here. It looks like it's going to, and but then turns green by the end of the day. I'll have to get back in because the risk reward on this and the probabilities are so high. All right, outside of Palantir, although I want to watch that for a second to see if I need to stop out Palantir. I'm going to keep a 1 minute eye on that. There it is. Yep. All right, stopping out. All right, that trade didn't work out, but I did what you're supposed to do. That's what happens sometimes. But I have 12 more chances to try at that 13 to 1 and break even. So it's really not that big a deal. When you have that kind of a high risk reward, you want to go after it. Okay, the market's pulling back now, so we do not get into anything. You never enter any position when the market's red on the day. And you won't know that necessarily from the news. You have to understand it's the change from open. So you go over to the stock chart and the candle will be red. Sometimes on the news, you could have a gap up and it starts up here, on CNBC or whatever, and then it's down all day, but they'll count that as up from yesterday's close and say it's green, even though the market is red all day. You do not enter on red market days, even when the news say it's green. You have to look at the chart and see, is the candlestick red or is the candlestick green? Because it's change from open is what's important. Change from open is all that matters on your entries. Whether it's down or up 1%. All right. So now we're not doing anything. We're going to have to let this flesh out for a while. And this was, I would say, a bad result because we had that nice follow through on the market, and now the market's reneging that. It's going back on that. And that usually means the liquidity has been max achieved as far as moneymakers up high. And now they're going to take that and they're going to bring down prices and for a while to a much lower point. Usually it's a point that's a couple days ago. Let's go take a look. They might be trying to race this down to this point here. So this could be a pretty red day today, actually, if that's the case. It'll be twice as red as it is so far, possibly, if that's what's going to happen. And it probably is dependent a little bit on NVIDIA's performance off of the open after its ER release there. It's about to break. I think that, the market is going to try and go down more. That would paint that 3-day drop we went through as potentially worse, which is what you might have seen during like the pandemic or any strong correction. Now, right now, we don't even have a strong correction, I don't think. Let me see. The difference here was 3.86%. So you might have felt that strong, minus 3.8% in the market. But that's nothing. I mean, back in July of last year, started this drop that was almost 10%. And everything's just fine. you know. And back here we had a drop of 9%. So hitting 10% drop doesn't change anything. Is fully possible, you know. And that would be, let's go take a look, down to, that would be that deep, you guys, just for a 10% drop. So that is in the cards and wouldn't change much. Like, in other words, everything would be just fine. So, you know, this is the kind of brace for impact that you can have in a bull market. It doesn't mean we'd be entering a bear market even, although it could be. It's definitely a sign that you should not be adding and allocating. You know, it's when it comes back up and over and puts in a kind of bottom that we'll know. Those are the moments in which you finally can say, oh, okay, now I can start getting back in. But yeah, while the market's below like the 50 moving average, this is just a general rule. You know, you want to be cautious. So like over here. But the thing is, once it gets back up above the 50 moving average, things are good again, you know. So, but right now we are chopping around on that 50 moving average, and we just last couple days are below that 50 moving average. And so this is kind of a back off point in the market. Now, being above the 200 moving average, that's a good thing. That's that red line that's down there. That's a beautiful thing. I mean, that's fine. Where you are above or below the 200 moving average in a 4-point trend, which can take about a month or two to put in, tells you whether you're in a bear or a bull market. We're definitely in a bull market, and economically speaking as well. But you do get these corrections, sometimes 10%, sometimes 5%, sometimes 8%, 9%, 5%, 7%, you know. But and even in the pandemic, I think we had a 20% sell-off or a 30% sell-off correction, but that didn't trigger a bear market. That panic. That was all the way to the bottom, was minus 34% on the S&P 500. But from there, we went on for 115% gains on the market. Then, as you can see, we went into a bear market. And how long do bear markets last? Not long. You know, that one was like a year and a half. Okay, so, but we're not really slated to be in a bear market. We have everything working against a bearish economy in a bear market right now. We have everything working against that, economically speaking. So but the thing is, we probably just will not see the fruits of every tweak and knob that's being twisted right now for several quarters. Like I've said a couple of times, 3 months to 15 months it's going to take to turn the ship around, and to really have confidence that we're flying in this other direction. In the meantime, bears are taking advantage of sensitivities. And they're going to go ahead and be shorting the market. They're going to go ahead and be putting pressure by selling shares short and being short. So they're going to create those pressures. And the unfair thing is that money managers have the ability to do that manipulatively. They can borrow people's shares, sell them short, and then that pushes the market down, or the stock, whatever it is. And then they make money, and then they give them back to the other person. The other person never knew they were gone, but the other person took a bet using their assets as collateral. That's, you know, called share borrowing and stuff. And so that's how you sell things short. And Robinhood and all these different companies, they allow that. You know, even the big ones, you know, Schwab and everybody. But the problem is, it adds a fictitious phantom 200, 300, 400% of selling power, of bearish pressure power to those who have, you know, enough money to actually make manipulations. And that's, you know, kind of unfair in some sense, because you know, they go on margin doing it, and it's just like money that doesn't exist. It's like phantom vacuous vapor. It's like releasing sulfur into the atmosphere or something. for free or something and having no effects to you, other than they can lose money by taking those bets. But if you're the money managers and market manipulators, you can use that power to your advantage. So anyway, when bulls feel a little bit weak or being careful, the bears have more power to push into that sensitivity. Bulls don't have as much power. They have 2 to 7 times leverage, whereas bears have about 4 to 16 times leverage. They have about twice. Bears have about twice as much power and leverage. So good for them. That's why prices, always have to be competing. But it also is you can't compete against growth. In other words, if Palantir comes up with an invention that's more efficient and it's going to make more profits, bears can fuck that up as much as they want with all the leverage they want, but eventually the profits are going to speak for themselves. So reality eventually obliterates bears' manipulations. Okay? But that difference between now and reality can be a quarter, 3 months. So they have a lot of play in there to fuck with you and make you question your confidence and all those kinds of things. And it's a real thing. So that's why you have to be able to muster 3-month swings, and sometimes it's like flipping a quarter or a coin. And if they got a tails, they can even try again, and then you could get 2 quarters in a row, and now that could trigger a bear market. So sometimes, bears can win. It's all about how confident the bulls feel, and we're not going to have that confidence until we continue to get the economic reports, until we continue to get the earnings release reports, and the forward-looking guidance. Guidance was the word I was looking for before. And, those are just going to continue to show. It's my theory, and it is my prediction, and it is where we are in the economic cycles. It is that those are going to continue to show improvement. And so the case is going to get stronger and stronger for bulls. In the meantime, bears are just poke at your wounds, and, you have to figure out, what you want to do with it. Do you want to be out there being poked at, or do you want to be sidelining, is what we would say in investing. So when the markets are below the 50 moving average, it's a good time to be skeptical. Not that it could be a bear market. It's just simply a good time to be skeptical with your risk capital. Doesn't mean that, for example, doesn't mean that the good signal can't come from right over here below the 50 moving average. But it's better when it pops above it, isn't it? It's a little bit more sure, and then you're off in the running. Signals above the 50 are cleaner on your confidence. But if you're an expert, you might be able to pick off signals underneath the 50 moving average on the market. But this is why we examine the market every day. Look at Palantir. It's now like $3 below the stop. Thank God you stop out when you're supposed to stop out. Remember, we did the study in live time the other week with just 8 stocks, and we concluded quite positively that it's very important that you exit when stops are touched, not wait. Not just wait for a couple days later, or not wait till the end of day, but right then and there. Not even waiting a minute, not even waiting 5 minutes, whatever. It's better. And you can always recover those losses when things are better. But you have to get out when your stops are touched. That's always been the case. I was just sometimes, in some rare occasions, in flaming bull markets, you can wait till end of day. You have this sort of support. But right now, we're not, where the market is very sensitive. The pressure is on. Right now, I'd say the last 6 days, you might call it a hard penny environment, is what they like to say. In other words, it's not easy money right now. And when that's the case, it doesn't matter if it's a bear or a bull market. If it's not easy money right now, you wait. You wait till it is easy money. And we were right on the precipice of signals and things turning around here and getting back above the 50 moving average. And so that's why today and yesterday we did a lot of speculative trying at the open. It's worth it if things were to take off. But it looks like the market really does want to go test this low here. So I think that's where we're heading today, which is bad. It's not bad for the market. It's not bad. It's just it is bad for prices going up. Prices are going to go down. But it's also bad because if we break that point, we'll probably have one panic day that puts us even further lower. And bears are going to get all the limelight for a while, for a week. Next week's going to be the bears are going to get all the limelight. And that's just going to push prices down lower to the point where you can get better entries. So it has that positive thing going for it. But all right, you guys, let's see. That's the morning show. Hopefully I've prepared you for the day. The day is sideline type of day. We took one shot, didn't work out. And I can see my Alaska Airlines also. I'm going to have to get out of that as well. It looks like Alaska Airlines is failing out. So there's that as well. All right, you guys, have a good morning. And I'll be back in the group. You can go talk over there. All right, have a good one.